Let's make sure we got it good. Up and running, and then we'll go from there. All right, so we are live on YouTube now. I'll be able to get to some of those questions at the end if people happen to pop on. What we have found actually is that some people have trouble with Zoom, and a lot of people have no problems getting on to YouTube. So we started putting a lot of stuff on YouTube now and streaming it live. That way people can just click the link and more people can actually see it. So hopefully that'll help, and then you guys will be able to, get back to it easily. So if you want this to review afterwards, then you just go to Big Dre Empowers and you'll be able to pull it up right there on YouTube. So I'll put that in there. It will be ready probably almost immediately after we're done. All right, so there you go. Appreciate it if you like and subscribe also. All right, so listen, we're going to get started today on risk management. That is going to be basically the whole of this. We're going to do a whole boot camp. So I'm going to cover a lot of topics. So if I were you today, I would have pen and paper handy, okay? I would get ready to take some notes because this is really the number one issue why people are not succeeding in trading, okay? This is literally the number one issue. Let me see this. Go ahead. There we go. This is the number one issue why people are not succeeding in trading is risk management. It's not the strategy. It's not I Am Academy. It's not you need another educator. It's not, you know what, I don't really grasp this particular strategy. I need to find someone else. It's not my team didn't help me out enough. It's none of those things. The number one thing that people struggle with is understanding risk and how to manage their account, okay? Now, in recent weeks, there's been some discussion amongst a lot of different people in I Am Academy, in terms of teams, not coming from I Am Academy itself, but teams and organizations within I Am Academy about people looking to complete a prop trader challenge. Okay, so for those people who have been considering doing a prop trading challenge, okay, if you do not understand risk management, don't waste your money because you will fail miserably and very quickly. All right. On that session. So if you can't manage risk, if you really don't have this part down, then the prop trader challenge route is not for you. Okay, I'm just going to tell you that right now until you've mastered this. How do you know if you've mastered risk management? Let me give you an idea. Ready? If you've been trading for a while and you still say things like, I can't put my stop loss that close because I have to give my trade room to breathe, you don't understand risk management. Okay? Because stop loss or my trade needs room to breathe does not mean that you have a stop loss problem. It means that you have an entry problem and you need to figure that out, okay? So these are things, little concepts. If you go into a trade and you have your stop loss and then you see it moving towards your stop loss and then you modify trade and move your stop loss just a little bit further or a little bit further or a little bit further, so that it doesn't hit your stop loss, so that the trade can turn back around and maybe go to take profit, you have a risk management problem. Okay, these are types of things. I'm just telling you right now, right? You definitely want to be able to comfortably get into a trade, comfortably have a level of risk, and comfortably get out of the trade. And it's okay. That's what things people don't understand is it is okay, especially if you're doing risk to reward properly. We'll talk about that. It's actually okay to stop out sometimes. You prefer to stop out on your trade than actually have it, put your account in a position where it's margin called. If you're still trading without a stop loss, I don't know what you're doing. You're gambling, you're not trading. There's not a professional trader in the world who trades without stop loss, right? There's not a professional, when I'm talking about professionals, I'm talking about commercial trading, people that actually trade significant amounts of money. They have to have a stop loss in. Okay, when you trade with a prop trading firm, a lot of the prop trading firms require your stop loss to be in place within 30 seconds of you entering or executing the trade. Okay, if not, it doesn't matter how good your trade is doing, they will cancel the trade and invalidate it. So let's just say you went into US 30 and boom, it just took off on a buy like it did the other day on a 1 minute candle move, like 3,000 pips. Right? and you got in there and you did not modify your trade, you just hit market execution and you went in and you hit it perfect timing and you caught all the 3,000 pips, well, not all of them, about 1,500 pips over that 30 seconds. If you had not stopped to modify your trade and put a stop loss in, they would have canceled that trade and all of that profit would not have counted towards your challenge because you didn't have a stop loss in, okay? So what I'm trying to tell you guys is that this subject that we're going to talk about is going to be important, all right? So I want to start from the beginning because this is really a boot camp. We're going to cover a lot of stuff, okay? And if that's all right with you, we're gonna knock out a bunch, all right? We'll probably circle back in a month or so and break some of these topics down individually. Like my wife, who is a VP of Academic Affairs, what she does for college is actually puts together curriculums and stuff like that. And so she's a master at this. And what she's told me is sometimes these boot camps are overwhelming because there's a lot of information. And so what she recommends is that we do one that sort of covers everything, and then we go back and we actually break down sort of topic by topic by topic. And so she's been invaluable in helping our team get a lot of support because we're changing some of the ways that we do things based off of educational models that we know actually work. All right. So with that being said, I'm going to cover some stuff. Okay. So one last thing I would like to address real quick is that if you're on with me, okay, you can actually talk. It's okay. This isn't like IM Academy Go Live where you can't actually reach the educator. If I ask questions, it's really okay to open your mic, right? You know what I'm saying? It's really okay to do that. If I ask for comments in the chat, it's okay to do that. Like I come from a tradition, you know, of African excellence, so to speak, where there's a tradition of call and response, right? Like that's the way we roll, right? So what I have found is that when there's more participation, it's a better experience for all of the people that are trying to learn, okay? Because sometimes there's a couple people that are too shy to ask a question, but they have the same question you have, right? Sometimes just the environment in general. As a matter of fact, y'all ever been to see a speaker before and the speaker bored you to death? Has anybody ever had that experience happen? Where the speaker was just like, oh my God, they're so boring. Or like if you were in college and you had that one professor, you had to take their class and it was just like, oh my God, it's so boring. Like if you ever had that happen, you know, yes. Okay. Thank you, Stephanie. So what happens is not only monotone, but you know, they're just boring. Part of the reason why they're so boring is because of the energy you gave them. So you contribute to their boringness. I don't know if you realize that. Once you become a public speaker and you get in front of people and you actually speak and lecture and teach and do all these types of things, you realize that the audience is just as culpable for the experience as you are as the speaker, right? So when we're talking about stuff, and this doesn't just go for me, this just goes for everybody. When Sakina's doing the training, when we're doing overviews, when we're doing all that stuff, imagine you invite your guests to an overview, right? And there's 100 people on the call and Sakina says a question and nobody types an answer in the chat. Does your guest like, this is a vibrant community, this is a place that I'd like to participate, this is where I can see myself doing business in the future? Or they're like, man, these people are boring as hell, I don't want to be a part of this, right? So it all comes together full circle, right? Not only in the trainings, but in the overviews and in the team calls. So what I'm just basically telling you guys is that you guys, this is an open environment. It's a safe space for you guys right here, okay? We can ask questions and participate, okay? So with that being said, let me start off with the very first question, all right? The very first question, and that is this. What is the #1 goal of a trader? What is the #1 goal of a trader? Hope says to make money. That's a good answer, Hope. Anybody else? Ocho Brown said to preserve capital. Ocho nailed it, okay? Your #1 goal as a trader is not to make money. Your #1 goal as a trader is to protect your capital, okay? That's your #1 goal as a trader, is to protect your capital. It's not to lose money or to mitigate losses as much as possible, all right? That means, I want you guys to change your psychology here. That means, have y'all ever gotten in a trade, okay? You moved your stop loss into profit, and all of a sudden it came back, wicked your stop loss, and then the trade took off in the other direction, and you're like, man, I missed out on all those pips. But You made $4, you made $40, you made 80, depending on whatever the size of your account is and your lot size. You made a couple bucks, even though you missed out on hundreds. The thing was, you did the right thing as a trader because you preserved your capital. You were actually in profit and you didn't take a loss. This mindset, this is the difference. This is how come people are in consolidation their whole life as a trader, because they don't understand this. Those $8, those $12, those $15 trades that could have moved on to something else. Yes, we want to master where to put our stop loss. Yes, we don't want to get wicked out every single time. But if you're getting wicked out in profit, you better say hallelujah. You better say something, right? Because your goal is to preserve your capital, not make money. The longer you can stay in the game, right, the better off you are, all right? So with that being said, the first part of what we're going to do tonight is we're going to talk a little bit about managing our expectations. Is that all right with everybody? So I'm going to go ahead and share my screen, and we're going to go ahead, and I got a little something for us, and we're going to talk about managing expectations, all right? So I want to talk about a couple things, right? Here we are, we got a gentleman, I think we all know him. His name is Warren Buffett, right? In 56 years as the CEO of Berkshire Hathaway, Buffett has overseen the creation of, let me get this so I can read it all, excuse me, I got stuff in the way, $600 billion in shareholder value and delivered an average annual return for investors of 20%. Now, you notice I didn't say daily return, monthly return, quarterly return. I said average annual return of 20%. Now, what I find interesting is that when people get involved in IM Academy, they're trying to outperform the greatest investor in the history of mankind, and Warren Buffett. And his annual return is 20%. You guys are trying to outperform him 3 days into the academy, right? Talking about I'm gonna get 10% a day, 15% a day, I'm gonna get 20%, I flip my account, all this type of stuff, right? We have to have some proper expectations as to what it is that we're doing. Maybe it's not just Warren Buffett. Let's see what else. Ray Dalio, right? Bridgewater Associates, average return over the last 28 years has been 11.5% per year. This number is important because it nearly doubled the average yearly return of the S&P 500. So the S&P 500 is on average returning around 6%. Ray Dalio, 11.5%. He's a billionaire because he can get 11.5%, meaning that because he manages other people's money, people trust him because he can get 11.5% per year, right? And so they give him money, okay? Paul Tudor Jones, watch this, his investment returned 125.9% by betting on the US stock market crash and earned around 100 million. In 1990, the firm returned 87, right? But those were outliers, okay? Because since 2010 to 2012, it only returned 5% annually. 2013, Tudor Jones returns started rising in with 14% in returns, right? And now he's up to 24%. But if you averaged him out over his lifetime, he's probably sitting at like 25% return per year. These are the greatest investors in the world, again, per year. Bitcoin becomes the best performing asset of the decade, returning 10 times more than the NASDAQ 100. 10 times more, but it didn't really gain any value for over 3 years. I want you to understand we're in the market cycle of Bitcoin. All of us are in DCX, or most of us are. We understand. I'm not going to try to do Curtis and Mike Sotero and all those kind of tradings, but we understand that we're in the pullback that happens every halving, right? In the 4 years between halving to halving, we have an explosive growth, we have a pullback, we have a consolidation or an accumulation period, and then we have another takeoff before a halving. We're 2 years into this session of this particular market cycle. We had an explosive growth of 68,000. We're in the pullback. We're going to start to accumulate, and then we're going to get ready. And 2 years from now, when the next halving comes up, for Bitcoin to take off, right? We got to understand this stuff. It's simple stuff, right? The NFT millionaires. We were just on with NFTs. You don't know CryptoPunks was released in 2017? So the people who bought that project, and we're looking at CryptoPunks and we're looking at some of these things now and like, man, they made millions off of that. Well, they held those assets for 4 or 5 years before the project ever took off, before it ever gained any value, right? It wasn't like I bought an NFT and I was expecting to flip it for profit the next day, okay? We have unrealistic expectations when it comes to this space. And that's what we're trying to address right now, right? Cardano believers and our altcoins, they've been holding for years. They've been holding Cardano. Cardano is one of the most impressive projects in the cryptocurrency space. It's never cracked over, I think, $4 or something like that, right? These guys have been holding on for years, waiting for that time when it finally makes its leap. Same thing with XRP. So the thing is, guys, is that we have to understand that these projects take time to put together. We have to understand in trading that time is our friend, right? Time is our friend, all right? We're going to talk about it. 3 to 5 year plan. What if your account only doubled 3 times per year? Most of you right now trading, if your account doubled 3 times this year, you would be pissed. If you went from a $400 balance and ended the year after 12 months of trading consistently and only got to $1,600, you'd be pissed, right? IM Academy's not worth it. I didn't even cover my subscription, right? Like this is what would be happening right now, right? But you guys got to understand what's taking place, because if you doubled 3 more times the next year, you went from 1,600 to 12,800. Okay, a little better. Year 3, you took it to 100,000. 3 years to 6 figures as a trader, not bad, right? Year 4 and year 5, you see the explosive growth start to happen. And so many of us have already been in the academy for 2 or 3 years, and because we've been too aggressive, we've been too hyper aggressive, or we don't understand some of these principles that we're going to talk about through this boot camp. All of a sudden, like I said, our accounts are in consolidation, and then rather than have this growth, this consistent growth, this maybe to some people slow growth, but I don't know where else you can go for $400 and turn it into $3.2 million in 5 years, right? I don't know where that's at, right? And so, you know, this is amazing what we can do. We just have to understand the mindset of how to get there. So I'm gonna stop my screen right there. Is everybody with me so far? Right? You guys with me so far? Like, we have to adjust our expectations. All right. We have to manage our expectations just a little bit. All right. So here's going to be some keys that I'm going to use. That's the only PowerPoint that I got for you guys tonight. We're just going to really talk about some stuff and kind of jump in to some ideas of success. All right. So the first thing we're going to talk about is we're going to need to have, let me go ahead and share, kind of jot it down. We're going to need to have, number one is, I want you guys to understand that it's wise to diversify our risks, right? So it's wise to have multiple brokers. Okay. It's wise to have more than one broker. Have we started to see that right now in crypto? Right? People only had their money in Celsius, or people only had their money on this exchange, and some stuff has happened, right? It's wise in case these brokers become insolvent, in case they change policies, in case they do whatever it is that they do, right? Because they're allowing us to access and leverage them to get into the market, but sometimes they're a little dirty, I ain't gonna lie, right? So it's wise for you, this is again, mitigating risk, not to have everything in one broker. Everybody agree with that? You guys see this? Does it make sense? We're gonna have more than one broker, right? More than one broker that you're using for your account, all right? Someone said, is that last slide realistic? Is it unrealistic to double 3 times a year? Like, I think if we look at it, we'll talk about it. I'll show you some more in a second about how we're going to do some of these things. But to me, that's possible. That's possible. What if it was only 2 times a year, and it took 5 years to hit 1 million instead of 5 years to hit 3.5 or whatever, right? It's still possible. Okay. So multiple brokers. Number 2, you're going to want to have multiple accounts. All right. Multiple accounts. A lot of us have heard when we first got started, and our first really trading mentor for most of us on Legacy Worldwide was the great Dr. Kathy Kirkland, right? And we heard her story and how she created ECC 11 and how she went from, I think it was $40 to 7 figures in 9 or 10 months, something like that. But she talked about the fact that she started multiple accounts, right? She had multiple accounts, and accounts were for different things, right? So for those of you guys who like to trade a lot, right? What you need to do is you need to get yourself a couple accounts, right? You need to have an account that's maybe for scalping if you like to scalp. Maybe you have an account that does swing trades. Maybe you have multiple scalping accounts. Maybe you have accounts that you can be more aggressive with, right? But you want to have some accounts that are like disciplined accounts where you really follow the rules of risk management to a T, whether it's scalping, intraday, swing trading, whatever it is that you do in terms of your trading style. And then if you still have some accounts that you want to be more aggressive with, then you understand I fund up those accounts and I can scratch my aggressive itch with those, but I always have these accounts here where I follow the rules to a T, okay? I've never been a millionaire yet, but what I've heard from a lot of people who became new rich is that one of the things that they would advise is that you set a portion of your new wealth aside so that you can go do all the dumb stuff that you've wanted to do, right? Once you've been wealthy for a while, you don't really run out and buy the Rolls Royce and do all that. Like that stuff becomes just normal. It's like buying a Honda Accord, right? You know what I'm saying? So they don't do that, but they realize that you're going to do it. You're going to do it. So what they like, if you've never had before, you're going to go do it. You're going to go buy a ridiculous size house. You're going to go buy, right? You're going to go do all these different things. And so what they said is, take a portion and you just cap yourself. This is my new rich money. I'm gonna go out and buy the boat. I'm gonna go out and do all that, like whatever it is that floats your boat, so to speak, right? You have that there, and then the rest of the money, I'm gonna be sensible. So once I've used up this, I don't come over here and get this. I've had my experience of doing this, and now I need to figure out what to do, right? And so the same idea applies here to trading, is that you want to have some accounts that you're disciplined with, and then you can go ahead and have the accounts, because most of us have not controlled the greed in us yet. Most of us as traders, we still got the greedy itch. Like, man, I hit a lick on that, but if I would have traded 10 cents instead of a penny, it would have been, $8,000 versus 800, right? Like we have that feeling like we're missing out, that FOMO that happens. And so because we know that for most new traders or most traders that have been trading for a while but not having a lot of success, we know that you're not going to get rid of that overnight. I have tried. Like I literally have told people, like, you're like, I've met people who have been trading that joined the company when I did, and they never learned to use the stop loss, because those first couple trades, they won a couple. And so then they followed a strategy, and the strategy is not even in the company anymore. And now they're losing money, and they come and they're like, Dre, I don't know how much longer I can do this. I've lost 40,000. I'm like, what are you doing? And then I tell them, put a stop loss, do this. Oh, I can't do that. Like, it's so ingrained in them, right? So I realize that it's difficult. It's like stopping smoking. It's very difficult once you develop this bad habit. And we all wear it like a badge of honor, right? Like, yeah, if you ain't blown an account yet, you ain't a real trader. You don't have to blow accounts. That's just false. You don't have to have that experience, right? If you master this skill first, risk management, okay? And then if you want to blow an account because it's a fun account, right? It's the extra income maybe that you had to start that account, and you want to be aggressive and see what happens with that, that's fine. But have your discipline account. So have multiple accounts, all right? That's going to be really important in terms of you diversifying your risk. Number 3 is you're going to have a trading plan. And with this, I would recommend a trading journal. I actually just gave my most recent trading journal to one of the people on our team, my sister-in-law. I just gave it to her so that she could use it. But you want to have a trading journal, okay? And a trading plan, okay? And in the plan, you need to have some things that are identified for you as a trader, something that you're willing to do. The first thing is you need to have a daily goal, right? What is your daily goal? And that daily goal could be monetary, but most people use it by percentage, right? By percentage. What is your daily percentage that you'd like to grow your account? 5%, 3%, 4%, 2%, 1%. We'll talk about those in a little bit, right? What is your daily percentage that you're trying to grow your account? Okay. Now, here's the thing. Here's the hard part. Here's the hard part. When you hit that percentage, stop trading. When you hit your daily percentage, stop trading. How many of y'all have done this before? How many of y'all, let me see this real quick. I want to see y'all faces on this. Let me stop the screen share. How many of y'all have made some money in the market, hit a lick, like made your goal, and then you like, I'm gonna take this next trade. And then you took that next trade and then you lost some money. Y'all ever had that happen? Then you lost, and you didn't even lose everything you gained, but you have to understand the psychology, right? You have to understand the psychology. It's the same thing that happens with the casino. It's the same psychology. Y'all ever been to Vegas and you win $2,000 and then you go ahead and you play another hand of blackjack and you lose 400? In your mind, you're not $1,600 up anymore, right? Because you never took the profits off the table, put them in your pocket and took them home, right? So you never did. So in your mind, you're now down $400, even though you're up 16, right? So you're like, oh, hell no, I'm gonna get that back. And then you play another hand, and then you play another hand. And the same thing happens when you're trading, right? You're like, man, I just hit my 2% for the day, but this US 30 trade look real sexy right now. And then you go in and boom, you lose 1%. And you're like, oh man, I got to get that back because my goal was 2% for the day and I can't not get my goal now, right? So now you're in, and then all of a sudden you lose some more and you give it all back. And that's why you're in consolidation, right? Think about what consolidation is. It's up and down, up and down, up and down, up and down. And if you keep giving it back, you're going to keep going back down, right? Even if you would have done that and made the mistake and said, I got 2%, oh man, I gave 1% back, and you stopped at that day, you'd still be 1% up. At least you'd still be going up. But when we keep putting those trades back in, all of a sudden, boom, our accounts go back down. Make sense? So you have to have a goal. Once you have that goal, you have to stay committed to it. You have to have discipline. Discipline is, listen, the market is a perfectly designed instrument to transfer wealth from the impatient to the patient, okay? That's what it is. So you have to be disciplined, right? This is what this whole idea is about. So whatever your goal is, you set that goal and then you stay with it. You're gonna stick with it, right? So you got a daily goal, all right? You also need to have on your daily goal of what percentage are you willing to lose for the day? Like at what point do you say, I'm done, okay? I'm done. Now this is gonna differ on if you guys are looking to take challenges or not, okay? I'm on a challenge right now with a company where the max that you can lose is 5%, okay? So if you lose 5% of your account, you're done. So that means I have to adjust what it is that I can accept as a daily loss so that I can be in the game long enough to win. So I can't say, well, if I lose 5% for the day, because that means you'd be out on day one, right? I can't say if you lose 3%, because that's going to be more than 50% of what you can lose in one day, right? So there's different things. So you have to determine that for yourself, okay? 5% is a lot to come back from, believe it or not. 5% is a lot, it's a chunk to come back from, right? So when I'm trading my normal accounts that are not challenge accounts related, mine is 2%. If I lose 2%, I'm done. I just shut it down for the day. No more trading. All right. 2%. Okay. So you have to have a daily goal. All right. And you have to have what percentage you're willing to lose before you will shut it down. Okay. Number 3, you need to have a trading plan. Okay. And then you have to have a very specific trading plan. This is really important, guys. I know this is mundane, and some of you guys are like, man, I thought he was going to cover something new and exciting. It's because y'all don't do this that the new and exciting don't even matter, right? Because you're not even doing this part yet, right? Where's your trading plan? Your trading plan should be in your trading journal. You should be able to see it every day. What are the steps? What's the strategy that you trade? What are the 5 steps that you need as confirmations to take the trade? Whatever it is, whatever your strategy is, if it's colors, which I love, what are the things? What are the steps? If I'm trading the triangle offense, or if I'm trading the line cross, or if I'm trading scout, whatever it is, what do I need to take the trade? And are those things present? Okay. Are those things present? How many of them can I check off before I enter the trade? This is all important stuff, okay? This is all important stuff. Fourth, with that trading plan, you need the journal. And here's why you need the journal, right? Because what happens is, as you guys begin to trade, as you've been here long enough and you've been able to incorporate DeLorean and ECC 11 and all these different strategies into your toolbox, so to speak, right? That's some good stuff. But what happens is sometimes those strategies bleed into each other, right? I know my biggest challenge when I first started trading colors was I had to empty my mind and just let the colors line up and not say, oh my God, you know, this is too low on the RSI or too high. Why would I take this? I just, boop, line up the colors and take the trade, okay? But what I want you guys to understand is that what happens is that you need to have data. You need to have data. You need to take the trade. You need to log it in. What was the currency pair? What was the time of day? You know, what was the strategy that you used? How many of the confirmations were present? What was your entry point? What was your exit point? Did you win? Did you lose? Did you hit take profit, et cetera, et cetera, et cetera, right? You're logging that information in because inevitably what will happen is that you're going to go on a run where you have some success for a couple of weeks. And then some things are going to start to change because what happens is you start to see as you're succeeding as a trader, you start to say to yourself, man, that's going to go up right now. You're no longer basing it off confirmations. It's just experience now. It's just, I've been in the markets now, right? And then all of a sudden, you have a couple of weeks where you lose. And you're trying to figure it out. Well, if you haven't documented each trade, then it's very difficult because you have no data to figure out what it is that you did wrong. Are y'all getting me? Are y'all here with me, right? You have no data to document. Now, all businesses run on data. They run on analytics. They need data. This is what drives not only innovation, but improvement, right? Is data. So if I realize all of a sudden, man, I was doing well for 4 weeks and this past week I haven't been doing well. Oh my gosh, I've had 5 confirmations. I used all 5 confirmations the 4 weeks ahead, but this last week I ended up only using 3 because I thought I understood what was going on and I was jumping in. Oh, I can fix it now. I need to go back to 5 confirmations. But if I don't have the data, how do I fix the leak in my boat? How many of y'all have a trading journal? If you actually have a trading journal that you use, put a 111 in the chat. 2, right? 3, good, good. So that trading journal is helpful, right? You're gonna get that information, you're gonna put it in there, you're definitely logging your trades. I love it, good, 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 good. All right, so I'm getting these basics with you, and then we're gonna hit some other stuff, all right? So you've got that, you've got your strategy, you've got your daily goal, you've got your daily loss. What's everybody's daily goal? So type your daily goal in the chat. Give me what's your daily goal? What are different people? What's your goal? What are you looking for? Hope you can get a trading journal off of Amazon. Just put in Forex trading journal and there'll be a bunch of them that pop up. No problem. What's your daily goal? Anybody? Someone type it in for me. Uh-oh. Uh-oh. $30. What percentage of your account is that? 1 to 3%. Okay. Perfect. I love it. 1%. Okay. What's your daily risk? Anybody want to put that? What are you willing to risk per day? I'm with you, swing trader. What's your daily risk? Or your weekly risk in that case? These are important. So right now, maybe you haven't considered that, okay? So, okay, so you're willing to risk 2% in order to get 1%. I want you guys to think about that. I want you to think about some stuff, no more than 1 to 3% perfect. So what you're looking at, right, is that if you were willing to risk, right, if you're willing to risk 60 in order to gain 30, is your risk to reward in your benefit? I want you to think about that, okay? But it's okay. That's not bad. What you're saying is risking 2% is not bad, right? It's not bad because you can have many days in a row where you get 1% before you ever lose, or 2%, right? Before you ever lose. So you're not, that's not bad. I'm just saying, I want you guys to start thinking about these things, all right? So your risk per trade. Okay. I'm trying to jump around to a bunch of stuff so that you guys can kind of get a full understanding. And then we're really going to take a deep dive into the actual trading aspect of stuff. All right. Okay, perfect, Hope. I'm glad you're on the call. I'm glad you're on the call. All right. So here's the thing that I want you guys to understand. The reason why we need to know what our daily limit is and what we're going to risk per trade is because these are the things that now we're actually going to jump into sort of the risk management that most people are thinking about. Now that we know that we need multiple brokers, we need multiple accounts, we need so that we can diversify our risk. We need to have accounts for different purposes, right? So that maybe if we want to keep trading, like, you know, we talked about if you hit your daily goal, it's okay to shut it down on that account and move to your aggressive account, your more fun account or whatever, where, hey, whatever happens, happens, right? We still want to win on those, but at least that gives us the ability to do that. But we have one account or two accounts or a handful of accounts that are growing the way that they're supposed to do. We know we're supposed to have a trading plan, right? We have to have a trading plan in place for daily goals, daily loss, right? We have to have our strategy present so we know what our strategy is and we need to log every trade. Now let's start talking about what we have to do and why some of those things are important, all right? We're going to talk about right now how we're going to move into different trades. We're going to go into risk to reward after that. And then, of course, we're going to go into a compound calculator and look at some other stuff, okay? So, but before we do all that, let's really move into what happens when we take a trade, because I want you guys to get the real nuts and bolts of what's taking place, okay? So the first things that we need to understand, let me go ahead and share my screen again, all right? And let's go ahead and clear this. The first thing we need to understand, and we can do this from the start, okay? I take trades now that have a lot of pending orders, so this is a lot easier because I can calculate all this stuff out before I actually have to take the trade. A lot of times, though, people are still in the aspect of market execution. So they're pressing the button, they're entering the trade, and then they have to really calculate this stuff relatively quickly. But the first thing we need to understand at the beginning of the day, when we start our trading process, is we need to do one thing. The first thing we need to do is we need to check our account balance. Our account balance. And based off of whatever our account balance is, we need to discover two things, right? So I'll just put 1A. 1A is we need to understand what 1% of our account balance is, and 1B would be whatever our risk, our maximum risk is. So if we're going to risk 2% for the day, we need to know what 2% is. Okay, so if I have $1,000, 1% of my account is $10, right? And 2% of my account would be 20, right? So we need to understand those numbers. Whatever those numbers happen to be, you need to understand that to start the day. Okay, what am I able to risk? All right, what do I want to risk per trade? Okay, this right here is the important question. You have your daily loss, you already have that figured out, but what do I want to risk per trade? So if I have a daily loss goal of 2%, right? And I risk 2% on that trade, that means I can't take but one trade for the day, right? Or I can't take but one trade for the week or whatever it may be, right? And so you need to understand how this works, okay? Because I'll be honest with you, I made dumb mistakes when I first got started. Like I kind of understood this. I was like, oh, okay, don't risk more than 3%, right? But so what I was doing is I wasn't risking more than 3% per trade, but I had 7 trades open. So really I got 21% of my account at risk. You understand what I'm saying? And then I was doing even dumber stuff. like I was trading pairs like USD, JPY, right? And then I would trade another pair like GBP, JPY, right? So you notice now I got two trades open, but they both have JPY in it. So if JPY goes crazy, it messes up both my trades. You understand what I'm saying? It messes up both my trades. So now I got all these trades open that I shouldn't have, and I'm not understanding how to diversify within the Forex. I just hit y'all with some sauce right there. I hope y'all caught that. I hit y'all with some sauce right there. To diversify within the trades I'm taking so that I'm not taking trades all lined up with the same currency pair. So I'm not taking multiple trades on the same pair, right? Because if that pair does something crazy, some breaking news happens or something like that, it's gonna, right? All my trades now are jacked up. Where if I only had one pair tied to JPY and one pair tied to something else, right? Then all of a sudden I have different trading opportunities. All right, anyway. So I did all that at the beginning, all right? I messed up. So what you wanna have is 1% out, or whatever it is that whatever percentages that you choose, okay? I like to risk 1% of my account per trade, okay? That's what I like to do, okay? I'm a little conservative and I understand that, so that's why I'm saying you can adjust it to 3%, 2%, whatever it is that you wanna do. And sometimes I'll stretch my 1% because if I'm trading crypto and I need to get to 1.5 pips to 1.5% to really make the trade work or something like that, I'm a little flexible there, but I don't go from 1% to 6% or something like that, right? I don't make giant leaps, right? So you need to know what your starting balance is. It's going to make it very easy for you. And then once you understand that, the next thing you have to understand is how to count pips. All right. So for those of you who don't do well in this subject, I'm going to do a pip counting class coming up soon, okay? So that you can learn how to count pips properly. Some pips are very easy. So for instance, Bitcoin, $1 is 1 pip. So if it moves $100, it was 100 pips, right? Very, very simple. Some pips are a little more complicated. The JPY pairs, I find them very simple, right? Gold, every 10 cents is a pip, right? Like there's just certain things. Ethereum, same way, right? You got to learn how to count pips, because the first thing, once we've identified what the percentage that we're going to trade, we have our daily loss, and we're going to put our, let's say we're taking 1% per trade. Now we have to know what our stop loss is in pips. Right? In order for us to see if we can even take this trade, right? So let's talk about it. So now what do I do? Is this helping anybody, by the way? Are y'all getting anything out of this? Like, you know, is this helping you guys understand how to start to think about mastering this concept? Right? Right? So what I want you guys to do is, once you guys do that, I'm going to give you a site, okay? I'm going to give you a site. Let's get rid of this. We already do this. Get out of here. We don't want you anymore. Get out of here. We want you. First thing we're going to go to is our position size calculator. So, we got YouTube. Hold on, YouTube. I got to quiet YouTube. So what I want you guys to do is, I'm going to close it there. Okay. So we're going to go to our position size calculator. Okay. So this right here is a site called My FX Book. All right. You get there, you're going to go to Forex calculators, and you're going to go down to position size calculator. Okay. This is very important, because one of the things that I've learned over the years is, as a rule, a lot of people will tell you to risk 1 cent per $100. And that's not necessarily accurate, because every single pair has a different amount, actually. Okay. So what I want you guys to be able to see is how this would actually work. So let's say we had a $1,000 account. We're going to trade Euro USD. Our account size is $1,000. And all of a sudden, we decided that, okay, our stop loss was 37 pips. Okay, so on this particular trade, we have a stop loss of 37 pips. We want to risk 1% of our account, or whatever it is that you've set. I put my stop loss in pips, 37, and then I just hit calculate, right? And so what it is telling me is that on this particular trade, I can take a 0.03 lot size, right? I can take a 0.03 lot size in order to be able to make sure that I stay with this, all right? So in order to make sure that I stay within my proper risk management. Do y'all see that? You see how it works? This site right here is a game changer because what it's going to stop you from doing is over leveraging. Because again, remember, if we use the other logic said 1 cent per $100, which means that we would have been trading a 0.10 lot size or 10 cents. And now all of a sudden, instead of risking our 1%, we would have ended up risking considerably more if we lost, because at 10 cents, we would have lost $37 versus $10, right? So all of a sudden now we've blown past what our acceptable losses are for the day because we were using information that's invalid. Well, this is going to give you valid information. And see, when we start to know better, we do better, right? So when we come here, Euro USD, we know what our account size is, we know what we're risking, we know what our stop loss is, and then boom, we can now execute the trade, okay? Now, I want you to see something. It changes. It's not the same for every single pair. See, for GBP AUD, the same parameters, but now we can actually risk 4 cents. And so why is that huge? Well, that's huge because it's not just about the stop loss of that case. Because if you had only kept it at 3 cents instead of 4 cents, when you hit TP, you actually missed out on what could have been significant profit for your account because you're trading the wrong lot size based off of what you should be risking to reward. Does that make sense? Are y'all with me? So as you move, and you guys can come play with this yourself, you'll see that different pairs are going to give you different sizes that you can risk, right? NZD-JPY, it says 4 cents. USD CAD is back to 3 cents, right? Depending on what it is that you have, USD-JPY is 4 cents. The same parameters, but it's going to change what it is that you can risk and what your reward will be at the other side of it, okay? So what we have to do, remember, we need to understand what it is, okay, that we're risking per trade. And then once we understand the percentage point, we need to understand our stop loss. Now, what happens if our stop loss on USD JPY was not 37 pips? What if it was 152 pips? Well, see, right then, we really couldn't take that trade because it would actually blow past the $10 mark, right? At 0.01, we would actually be losing $15 on that. So we have to understand these pips so we know, okay, I can't take that trade. It's okay, I can pass on it. Oh, I know it's going up. I know, but there's so many trades. There's so many trades. Pass on the ones that could blow your account. Pass on the ones that could have you lose too much. Pass on the ones that don't fit the parameters, and take the ones that do and watch what happens, right? Take the ones that fit the parameter of your account. Who cares what everybody else's account is? Sakina might be trading a $100,000 account. We don't know, right? She should never show us because it doesn't matter because she's not spending any of the money on us, right? I've never understood why people need to see. I don't need to see anybody else's account. Show me the strategy, right? Let me back test it myself. Let me see it myself. Let me work on it myself. Let me develop it myself. You know why? Because Randy Webb is not spending a dime on Andre English. He got his own family and 5 kids to take care of, right? And his beautiful wife, Wanda, right? So it doesn't matter what they're trading. I'm excited for them. I'm excited when he posts something and it's like a huge win for him and his family because I want him to win because I have an abundance mindset, right? I don't care that I missed that trade. I'm happy he caught a lick, right? What I need to focus on is my account for my family and my household and what I got going on and what I'm trading and making sure that I maximize my trades and that I get the percentage points that I need for my house. Does that make sense? Are we all here? Y'all with me? Right? So a lot of times when we see all these things posted and all this other stuff, it leads to, I know it's supposed to be motivation, but it leads to FOMO. where you have a fear of missing out. And as a fear of missing out, listen, I'm not a spiritual guru or anything, but I know that we're supposed to operate on faith and not fear, right? And so if you have a fear of missing out and you're operating in fear, then that never ends up leading to a good thing, right? That never leads to a good thing, right? So we don't want to have FOMO, right? Does that make sense? Are y'all with me? Right? So what we need to have then is an understanding then of, okay, let me get in here. So my FX book, y'all going to use this going forward, right? This is going to be one of your friends. If you haven't had it as your friend before, you're going to use it so that you can properly get into an understanding, all right, of your trade, and make sure that you're trading the right amount for whatever your account size is. This does not, I don't believe it does crypto. So you're going to have to learn how to count crypto pips. For those of you who do swipe coin and other things, you're going to have to learn how to count them. Okay. This does a lot of the work for you for our regular Forex pairs. It does even do gold, I believe, right? But you're going to have to count them. You're going to have to figure out how to count them yourself. Okay. And that's okay. Again, study to show thyself approved, right? It's okay to study. It's okay to put in the work, right? Whatever it is that we're doing, if we put in the work and show ourselves approved, then that's what we want to be able to do. We want to be able to put in the work. I have found oftentimes when I put in the work, I didn't feel worthy of the success anyway. And if I didn't feel worthy of the success because I knew I didn't put in the work, I never held on to the success long enough, right? But the more work I put in, the more effort I put in, the more time I put in, the more I invested and was sincere in that investment, then oftentimes those rewards were long lasting, right? And so the same thing here, if we realize that this is truly a skill set that's going to be able to change our lives, that could be generationally impactful, that we can now teach to our children. Like, why would you want to not put in the time to something that you're actually going to teach to your children or your grandbabies, right? Why would you want to half-ass that education, right? So here, this is where we put in the time. So put in the time, do the work, learn this risk management, and you guys are going to find out that you guys are going to have a lot of success. I'm not here to preach, okay? Because I'm not a perfect human by any stretch of the imagination. We got a lot of things that Dre got to work on within Dre. All right, so let's talk about risk to reward real quick. Let's talk about risk to reward real quick. This is a concept that not a lot of people understand. See, a lot of people, when you first start trading, Hope, you think that you have to win 80, 98, 95% of your trades in order to be successful. And that's actually not true. And for most people, it's not even probable, okay, for most people, all right? And so we get enamored with numbers. Someone will post, oh, we won 95% of the trades for the month and whatever. That's fine, that's great. Like, we have some incredible strategies. We got some incredible educators. We got some incredible stuff going on, right? Within this I Am Mastery Academy. But here's the truth of the matter, right? Is that as long as you have a proper risk to reward ratio, you can actually have a losing percentage, but still be a winning trader. Now, for me, that's more comforting, right? That's more comforting to realize that I don't have to actually have a high win percentage. I could be like a baseball player. A baseball player who hits 300, he getting paid a lot of money. 350, he getting paid a lot of money, but most of the time he strikes out, or most of the time he doesn't get on base, or most of the time he fouls out. Like, the majority of the time he's not successful, right? But he gets paid a lot of money. Uh-oh, am I back? Am I back? Y'all got me back? Okay, cool. What I was saying is, Hope, is that you don't have to win 80 to 85% of your trades. Okay, you don't have to win that. The amount doesn't have to be that high. All right, once you learn proper risk to reward. So let's talk about risk to reward just a little bit. All right, and you'll have a lot of your educators that will focus in on this. Okay, but risk to reward is very, very important concept. So let's just say that you were going to risk 1 and you were going to gain 2. Okay, so in this case, you're going to risk 10 pips to gain 20 pips. Okay, so what would happen here if you won 50% of your trades, just out of curiosity? So you won 5 and you lost 5. So you won 5 over here, you lost 5. So in this case, at a 1 to 2 risk to reward ratio, that's 50%. That means that's all you are, 50% trader, right? You'd be failing out in school. that means you lost 50 pips, but you gained 100 pips. So overall, you're plus 50 pips for those 10 trades. You are a winning trader. You are a winning trader. If this ratio was changed a little bit, excuse me. Let's see here. If this ratio was say 1 to 3, right? You got 10 pips over here and you got 30 pips over here. Let's say you lost 7 trades, right? Let's say you lost 7 trades. So you lost 7 over here, that's 70 pips, and you won 3. You won 3 over here, that's 90 pips. You're actually plus 20 pips in the positive. So you can literally go 30% and still be a winning trader. I want you guys to understand this. This is mindset, okay? This is understanding what's taking place in the market. You can literally go 30% and still be a winning trader. If you went back up to 50%, you'd be a wildly successful trader on these ratios. So you want to look for trade setups where your TP is going to be far enough out that it's going to allow you to create some of these advantages. All right. This is a very difficult thing to do on scalping, but it's a very easy thing to do when you're talking about swing trading. Okay. So just want you to understand the different variables, right? Risk to reward. What is my risk versus what my reward is? You can get trades that are 1 to 5, 1 to 7. On colors, I've seen some crazy ones like 1 to 12. Like you imagine, you could go 1%. It's 1 or 10%, excuse me, and still be an incredible trader trading 1 to 12, right? You'd still be 30 pips up. And you would only one out of 10 you got, right? So this right here is another important concept. So when you guys are putting together your trading plan, when you're putting together trade ideas that you're looking at, I want you to be able to calculate your risk to reward. I want you to be able to see what it is that you would do. Where would you go on TradingView to do that? Okay, let's just pull it out. I'm gonna show you the tool real quick. I'm gonna give you guys everything that you need to be able to succeed. Now, some of the trades that we call out on colors don't always offer that. We offer a 1-to-1 ratio, but we talk about also putting our stop loss and profit very quickly, and then the potential that the trade could go even further, right? But look at this. Look at this. Let's look at these out of here. Let's say get all this out of here. Let's go to a different pair. I don't know, maybe one I don't have marked up. Okay, so let's just say that we were going to, I don't know, take a sell, right? I'm just giving you a hypothetical one here. So we're going to come in here. We want a short position, and so let's just say that our entry point was here, right? And our stop loss was here. And then all of a sudden this tool, let's just say our take profit was way down here. Well, this tool is going to show you what it is, right? It's over here on the side, right there for a short position. It's going to show you. So when the educator says, hey guys, your entry point is 106.174. Your stop loss is 107.415.
We can't see it.
You can't see it? Let me stop the share.
No, sir.
Share again. Let me stop the share. Thank you. Boom, you got it right there? Can you see it?
Yes, we can see it.
Yes.
Good, perfect. So when your educator says, hey, there's a trade idea, your entry is 106.174, your stop loss is 107.415, and your take profit is down here, 101. What's my risk to reward? So that means this is an exciting trade. This is a 3.85 to 1. So 1 to 3.85. That means I don't even have to be right a lot for me to be able to jump into this trade. Now, if it came down here because I'm scalping, right, and my stop loss was there, and maybe my risk, my take profit was here, maybe it was 10 pips or 20, right? All of a sudden, that's a negative risk to reward ratio. That's probably not a trade I want to take or get involved in. Do we understand? Right? So when the educator, listen, it's your money. The educator is trading their money when they do take a live trade, okay? So it's incumbent upon you to make sure that you understand what you're risking and what you have the potential to get on a reward. That's you, that's on you. You have to participate in your own rescue. So learning these tools right over here, again, this is 1, 2, 3, 4, 5, 6 things down. We got the long position or short position. So if I'm in a buy, it's a long position. If I'm in a short, it's a short position. Get on your trading view and learn how to play with these, right? Get on your trading view and learn how to play with them. I put it here. Look, if I wanted to, again, I wanted this to be my entry. I stop right there. It puts my entry point, and then it allows me to pull my stop loss to wherever I was going to set it. It allows me to put my take profit to wherever I was going to set it, right? In a potential trade idea. And now all of a sudden you can understand your risk to reward. This is a critical thing when you're setting up trades, okay? This is a critical thing when you're setting up trades. And this is beautiful to understand and to learn. Another quick thing, by the way, as a little tip, I'm going to give you a nugget, is if you're looking at a top-down analysis, a TDA, meaning you're starting on the weekly or the daily, and you're going to go down in time frame to look for your trade. Let's say you had a trade idea. Let's say same one here, same kind of idea. Let's see here. I'll give you a little tip what you can do. Let's say that was your entry and your stop loss was, you know, maybe all the way up here, and you were looking at an entry and you were looking to ride it all the way down here, whatever it is, right? If you said, man, this stop loss is too many pips, right? 750 pips, whatever the pip amount is, right? If it was too many and you said to yourself, I can't do that. Well, what you can do is you can reduce down in time frame and begin to look for the trade setup that you have, right? Which we're starting here. You can start to look for the same trade setup where another entry would happen earlier, right? But have a lower stop loss, right? Because on a lower time frame. Just to give you an idea, set the same TP, but have your stop loss mitigated down to maybe here now versus the other. So when I go down in time frame, I can actually take the same idea with the same TP, but I can have a different stop loss to potentially mitigate my stop. And so I can potentially participate in a trade, all right? Just something to share with you guys on that. So everybody understand where to get that tool from, so that when we're doing our risk to reward, we can pop on TradingView and we can make sure that the educator, because listen, I remember being on with Dr. Kathy Kirkland, and she would say, scared money don't make money, but she already had 7 figures up. And so my money was scared as hell. You understand what I'm saying? My money was like, I got $400 and that's it that I can afford to put in here. If I lose 40, my wife gonna punch me in my throat. Like, you know what I'm saying? Like that, my money was shook. It was shook, right? So I needed to understand to have some points, right? I needed to have some exits, right? And so I began to put some of this together, all right? Risk to reward. So everybody got my FX book, right? You got your trading view, where to put your risk to reward, all right? And then we understand that we're looking for how many pips our stop loss is so that we can calculate our loss, all right? Shooketh, I was shooketh, I ain't gonna lie. Now, what I wanna show you is more along the side of that patience. Like, what is it that we're actually doing? And how does this risk management come into play? And we're gonna start to talk about some of the goals side of things. Like what can we do? How does money potentially compound? What is actually available to us, right? And so I'm gonna take you to a different site, and it's gonna be Compound Daily. And we're gonna talk about a couple things. Now, I gotta be honest with you. There was a couple things, Sakina, that I didn't realize when I first started. I should have, but I didn't, right? And one of those things was that we're in a network marketing company, right? We're in a network marketing company. So for a lot of us, and we've never been able to break this, and I'm hoping that you guys will break this today. I'm going to show you something, okay? A lot of us, when we came in, how many of y'all remember the 90-day run? We were going to get 10% a day for 90 days. Y'all remember the 90-day run? Anybody remember that? And so a lot of us came in under this impression that we were going to pop the 90-day run. Now, me personally, I've never met anybody who completed it, but we were going to do the 90-day run. How many of y'all have seen the spreadsheets, the aggressive spreadsheets on the 90-day run, 10% a day? Well, what happened for me is I would get to like day 40, day 30, and then something would inevitably happen. Now, at that time, I was also trading with no stop loss because my first sponsor, he had a strategy. I was following his strategy. I didn't ever really listen in the sense that I was having some success, but he had said these words and they didn't really click until like 9 months into the process. But he was like, I never went through the academy. I used to call up my best friend and I would listen to what he told me about the videos the night before. Like that never really clicked in my head that he hadn't even gone through the damn academy that I'm going through, right? I was just following his strategy that he created up, but he hadn't even gone through the academy. So I was like, okay, right? So again, dumb stuff that you guys don't have to do. I recommend that since you're paying for it, you go through the academy. But one of the things that, again, and this is going back to Dr. Kathy Kirkland, is that her story was so profound and it's true. She was able to go from 40 to up 7 figures. You know, she mentioned, she was real honest with it too, because I think she mentioned that part of that was she was able to flip a house or something in that process. You know, she got the money to buy like a deed or something and she flipped the house, right? So it wasn't all Forex money, but she was able to go and it was a great story. And so we started with these 90-day runs. But then I realized that 10% was not really attainable, because then I started looking, I went to this site and it was talking about the greatest Forex traders in the world. And I started off with that. I started off with the greatest traders in the history of mankind, the trader that people give hundreds of billions of dollars under asset management to. And they're returning 20% per year. Now, I understand they're under different constraints, right? They have to diversify risk, they have to do some stuff, but they're giving billions of dollars per year of people's money to manage, and you're not giving any of your money. Like your wife don't even trust you to manage your money, but all of a sudden you're gonna go out here and get 20% or 10% per day. It don't make no damn sense, right? And I started to understand this, and here's why. Well, let me put it this way. Dr. Kathy Kirkland, bless her heart, and I'm just using her name, and it's all the educators. She's wonderful. Trust me. Like this is no slight to her in any way, shape, or form. But what I didn't realize is that those sheets are not trader sheets. Those 98 challenges are not trader challenges. They're network marketing challenges. See, they're challenges that get people excited about joining the company, but they have no realistic point for any actual trader. Let me show you why. Because as benevolent and as wonderful and as much time, even going through cancer, as Dr. Kathy Kirkland is, that she would show up every single day. If she got 10% a day on her account every day for an entire year, let me show you what that would actually be. If she started with $100 and she got 10% every day, and she did that for 365 days, right? She reinvested everything, included weekends, sure, right? All of a sudden, her total would be like $1.28 trillion. Now, as benevolent as that woman is, if she could go make $1 trillion, she wouldn't even show up. She would focus on making $1 trillion for her family. Y'all understand what I'm saying? There would be no trading. She wouldn't show up in the morning. She wouldn't care how many pips. She wouldn't have to go through people telling her, right? All of a sudden, oh, I lost a trade and you lost me. She would not go through any of that stuff. You know what she would do? She would have the biggest damn church in Texas. There'd be all kinds of people. She'd be hanging out with TD Jakes. Like, you understand what I'm saying? Like the whole thing would be totally different, because as benevolent as she is, every single one of our educators would go get the $1.2 trillion if 10% a day was realistic. And so when I saw that number, I realized, I said, hold up. This 10% a day thing don't really work out too well. And so all of a sudden I said, well, what if I adjusted the numbers? What if I played with the numbers? What does it actually produce? And then I started realizing, hold up. I can't even trade 365 days because I'm a retail trader, right? Now I can with crypto, right? But the banks trade 320. How much money are they making? If I show y'all that, y'all gonna be pissed. So I won't even do that. I'll let y'all figure that out on your own, but y'all be pissed. At 0.5% what the banks make off your money over, say, a decade, you'll be like, what? Like, you know, so that means from $100, they made 50 cents on day one, right? And you would be like mad as hell. I only made 50 cents a day. The bank is like, hallelujah, thank you, Jesus, right? Allah is wonderful, right? That's what they're saying, right? Because they understand compounding. So the whole point of a trader, okay, the whole point of us understanding this risk management is so that we can compound our money. That's the only thing. Listen, there is no redeemable value of a trader at all. The only thing that traders produce, and you got to get this through your head, is cash. That's it. That's why entrepreneurs don't like us. Other people, they don't like traders, because see, an entrepreneur, they start a business. Sakina starts a business. Her business provides value to people, intrinsic or otherwise. Then she provides jobs for her local community. She's employing people, right? There's value that comes from her idea, from her vision. Trader, no. All I want is money, is cash. That's the only thing that trading produces. Now, what you do with the money, how you deploy the money defines you as a person, but the act of trading produces one thing, and that's cash flow. So if that's our goal, that's why we're mitigating the risk as much as possible, because we got to risk as little as possible so that we can get to the cash flow. We understand? So the only way we can make our cash flow make the most amount of money is to compound it, right? But we don't need to compound it at 10%, because 10% puts our accounts at too much risk. What if we compound it at 1%, 2%? Now, let me ask you this, because someone was talking to me today. Are those goals realistic? I think Hope mentioned that. So of all the knowledge and all the training that you're getting in I Am Mastery Academy, is it feasible to think that you could take $100 and make $2 on it in a day, right? Is it feasible that you could catch 20 pips? I mean, it might not every day, but is it feasible that it's possible? I believe that's pretty realistic. If I were to make $1 per day, is it feasible? Is it realistic, right? And I think so, right? Now we're tailoring this back. We're talking 1%, 2%. Well, let's look at it. If we had 2%, and we can't trade that, we can trade 250 days. That's all we can trade, right? And we didn't include the weekends. How much would that be? Well, that $100 would turn into $14,000. How many of y'all are excited about that process? Right? Your $100 went to $14,000 for the year. Are we okay with that? Is that all right? Most of us would probably say, okay, that means I Am Academy was working. But see, the problem is some of y'all will get to the point where you make $14,000 in 3 months or 4 months, and then all of a sudden you're like, like you got to keep going. Like, in other words, it's not enough. Right? And what I'm trying to tell you guys is that we have to have a different understanding of what's taking place with this compounding. 14,000 is wonderful. What if we changed it though? What if we put it at 3%? How much does it grow to? I want you guys to see the numbers. This is not me. The reason why I love this is because, watch this. This is math, not hype. This is math, not hype. Right? See, the 90-day game plan, that was hype because it was a tool to recruit people. What I'm showing you is a retention tool. It's a tool for you to stay so that you can get your education long enough. What I'm showing you is a tool for your household, for your family, for you to change the dynamics. This is the tool that you need to follow. We've talked a lot about faith because it's come into my life recently, marrying a minister, right? But let me tell you something. This is your Bible. If you don't follow this in trading, I don't know what you're following. This is your trading Bible right here. Okay? Because this is how you're going to get to where you need to go. Now, watch this. We don't need 3%, even though that number is sexy. What if it was 1%? 1%. Oh man, only $1,200 for the year. But let's look at what about year 2? 1203? What happened in year 2? 14,000, right? Let's just call it 14,000. 14,000, 168. In 3 years, if you took $100 to 168,000, are you happy? That's $50,000 a year. So what happens then, at that point, I want you guys to listen to this. This is important because a lot of you guys are going to come up against a lot of doubt and a lot of questions, and you're going to have family members like my sister, who I love dearly, who every time I talk to her on the phone, are you a millionaire yet? This is what's going to happen to you guys. And you guys are going to go through this process and you're going to be like, I don't understand. How come I'm not making as much money as I thought? Guess what? It's a process. It's a growth process. But here's the thing. How many of y'all have a plan right now that's in existence to take $100 to $168,000 over the next 4 years outside of what you're doing currently? Outside of being here in this space, where's the plan? Oh, Dre, where's the plan? Oh, let me show it to you. It's right here. It literally tells you exactly what you have to do on day 1, day 2, day 3, day 4. You can print it out. You can send it to yourself. You can post this on the board and you can literally class it off one by one, one by one, one by one. And every single one of those trades, do you know what they're doing? It's building you up the ladder of belief, because eventually, if you trade long enough, you get to the point where the account size is big enough, where the results are big enough that you don't have to go to work anymore if you don't want to, right? All of a sudden, you could buy that dream house. You could do different stuff as long as you follow the process. But here's the key. When you go to Thanksgiving and they say, oh, all you made was $14, a lot of y'all punk out. And what I'm telling you to do is you need to buck up and be like, listen, I made $14 today and I'm gonna make $14.28 tomorrow, $14.36 the day after that. The reason is because I have a plan, sister. I have a financial plan. I have mentors that help me. I have an educational process that doesn't rely on anybody else. I don't have to sponsor anybody. I don't have to talk to anybody. The only thing that I have to rely on is my own knowledge and dedication and skill set. And I have a plan of action that I can take every single day that's gonna get me to where I wanna go. What's your plan? And if you don't have a plan, you need to shut up, sit down, and figure out what I'm doing, because I have a plan that I'm following, and I'm 36 steps away on the process. How many are you? Right? This is a different thing because you actually have a roadmap. This is confidence. This is belief. I'm 36 days into my 250 days. I'm 45 days in. Uh-oh, I took a loss for 3 days in a row. I'm back to 42, but I can build myself right back up because I know where I'm going. The reason why most of us are in consolidation is because you have an arbitrary goal that says, I'm going to be a six-figure trader. Where? How? What's today look like? Is this helping anybody? Right? Does this make sense? This is how you move. Let me go step by step, day by day, 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 until I get to the point where I got to go. Right? The math is mathing. That's it. Right? So now you have a process that you can follow day by day. All right. Now, listen, here's what I like to do. Here's what I want to do. See, I don't want to build something off of perfection. Is that okay to say? Sakina, is it all right to say I'm not perfect? My wife will tell you that. She's been mad at me for the last 4 days, right? She'll tell you I ain't perfect, right? Okay. So I don't want to build something off perfection. So is it okay? What if I change the numbers? What if I said I want to get 1% or 1.5% per day, whatever it is that you wanted, and I wanted to change it. Instead of 250 days, what if I put 200 days or 180 days? Is it okay to say that I already know that there's going to be a day that I'm going to wake up and I'm going to have the flu and I'm not going to feel like trading? I already know that there's going to be a day, as much as I love these grandchildren, they're going to get in my hair and I'm not going to be able to do the trade that I want to execute. I already know that I'm going to lose a couple dimes per year. So is it okay if I build a realistic trading plan, a realistic plan that says, hey, listen, if I outperform it, great, but I'm not going to set my expectations so high that all of a sudden, right, I'm completely disappointed because I only got 180 out of the 250 days. Build yourself in a plan that gives you grace, that says that stuff's going to happen, life's going to happen. And even in building that plan, you're going to find that in 2, 3, 4 years, what's going to happen is your numbers are going to be magical. Here's how I actually build our plan. All right. I'm going to teach. This is what I teach our team. We actually go by a freedom number. Okay. Because most people are looking for freedom in this thing. And most people don't realize how close they actually are. So whatever it is that's your starting balance, you got $500, $1,000, whatever. I change this thing from a daily interest rate to a weekly interest rate. 2% a day, 10%, right? 10% per week, okay? I'm gonna change this down to 52 weeks, right? We're gonna reinvest, not include weekends. Now, I understand it says days, but you have to understand that when you altered it, now it's weeks, right? Because again, we're not doing a daily interest rate. This is now a weekly interest rate of $10. The person on our team starts off with $500, they don't realize how close they are to being free. What do I mean by that? Well, what do you need in order to step away from your job, right? What do you need to bring in per week to step away from your job? So let's just say it's $1,500, okay? The average income in America is about $50,000 per year, right? So if it's $1,500, it's even less than that. So let's say $1,200, but I'll say $1,500, right? $1,500 a week. Now, what I'm going to teach you to do is I'm going to teach you to double that to $3,000 per week. At $3,000 per week, you can now withdraw $1,500 and you can leave $1,500 in your account and allow it to continue to compound. Everybody get that? Now watch this. How many weeks are you away from getting to $3,000 a week? Well, in this case, if you followed a compounding plan, starting with $500, and you move through this process week after week after week. By the time you got to week 44, you're 44 weeks away from freedom. Where now you can actually withdraw whatever your salary is, right? And still allow your money to continue to grow. How many of y'all just got excited? This is math. So now you can withdraw that and still allow it to continue to grow. Now watch, does that mean you have to quit your job right then? Nope. Could you all of a sudden pay down debt with that extra $1,500 a week income? Could you pay off your car, your house? Could you counsel with your upline so that you can make some smart financial decisions? Could you invest in Bitcoin when it's over at 20,000, when we know it's going to go back over 68,000? Could you be buying Satoshis? Could you be buying NFTs? Could you, all the things that the Academy offers for you. You don't have to quit right away. You can start building some tremendous wealth through this process. But the point is that you've given yourself the opportunity to step into freedom. Now, here's the thing that makes this even more valuable. Is see, I know that if you go to your husband on day one and you tell him, hey, listen, Andre's going to give me, let's see what I needed right here. Andre's going to give me the $33,000 or whatever it is I need in my account in order for me to get 10% and $3,000 a week out of it. And I'm gonna quit my job today and I'm gonna start trading. And he's gonna look at you like you done lost your mind. Your wife gonna look at you like you crazy, right? You're going to look at you like you crazy because you don't even have the confidence. You'd be scared to trade the lot size big enough to actually make the trades that you need to make because you'd be scared to lose because you haven't built up the trading muscle. You seen Randy Webb? He built those muscles up over time. You got to build up the trading muscles over time, right? And so what this process does, why this process is so important, is because by the time you move 44 weeks down the process, you've also built up your belief that you know that if you stepped into freedom, you have the courage to do so because you already know that you've proven that you could do it for 44 straight weeks. What if your income was higher and it took you 67 weeks? Whatever it is, most of y'all have no idea how close you are because you never set a goal that was tangible. And you never mapped out how to get there. I actually looked at something the other day. 3% of Americans have goals, and only 1% of those 3% actually write them down. If your trading goal is not written down and not mapped out and backed out how you can get there, then obviously your risk management is not on point because you don't realize you're going to take too big a risk to make one move here and do this here because you don't understand that it's a step-by-step process. And all I really need is 1% a day. And in 5 years, I'm going to be wealthier than I could have ever imagined. So I hope this makes sense. All right. I hope this makes sense for you guys. This is basically the fundamentals of risk management. Okay. We talked about understanding the mindset, proper managing of expectations. That's why I finished with that. I started with it and I finished with it so that you guys understand managing our expectations is important. Understanding 1%, 2% a day, what that actually means over a period of time. What else if I got 10% a week? What is my weekly goal? When I sit down on Sunday night and we mark up charts as a team, what am I trying to accomplish this week? You know, in network marketing, Sakina knows this. They used to have phone teams where you get together with your upline, and usually you go by their house or something. And sometimes they cook food, and everybody sat around a table, right? And you would actually make calls, and you would book out the calendar because you had your upline right there, and y'all would book out. And all of a sudden, you know, one person would get a call, and another person would get excited, and they'd call on their chicken list and call someone, and it was a great way to fill up your calendar throughout the week, right? A call party, phone teams, right? And what happens is you would set it out, but every week, everybody had a goal. Hey, the goal is everybody does 3 plans this week, 3 presentations, whatever it is, right? How come we don't sit every Sunday night in the business of your family, in the business of your household if you're single, and say, what's my goal for the week? How am I going to get there? How many trades do I need to execute? What needs to happen, right? That's exactly what needs to happen. I'm fortunate now, and I'll be honest, we don't get there every week, but we have regular English family CEO meetings on the weekends. usually Sunday or Monday morning. And we sit down and what's the goal? What are we doing? What do the kids need? Every single week, just about, right? So that we can plan where we're going, right? So that we know the business of our household, so that we're all on the same page, so that we can include the kids in on it, right? So that they know where we're going, so that they understand that whatever sacrifices they have to make that we impose on them, that they get the reward at the end of the thing too, right? So these are little things, all part of risk management, right? Building up the belief of your spouse. It's part of your risk management, because otherwise they're gonna be there, right? And you ain't gonna be in the proper headspace. But because you told her, honey, in 90 days, we're gonna take $100 to 160,000. She believed you. She believed you. She was like, shoot, my boo, shoot, he good in math too. She telling her friend, girl, you don't even know what happened. You don't even know that she talking. You think that she ain't supportive. But I guarantee you, she saw that first trade. She saw you went and showed her 1 cent turned into $8. She on the phone right now with her sister. Girl, listen, that kitchen I'm gonna get that kitchen. I told you this man right here good. And then all of a sudden you come back. You come back. Listen, I'll be real with you. This just happened to me. Because the challenge account that I'm on is so strict for this account. Like I thought by now that I was gonna move it like in 2 weeks, right? You know what I'm saying? And it's taken me a little longer, but I sold her on the 2 weeks. Make sense? And so now she looking crazy, like, I thought you knew how to trade, right? Like, you know what I'm saying? Like that's how she's looking at me. But because I had never done this challenge account before, right? I didn't know how strict it really was until I started doing. Now, the good thing is it is super strict. So if you can complete this one, you can complete anything, right? But that's what happens. That's what happens. We give them false expectations, and then we wonder why wife is mad at us or husband's mad at us. So this process will allow you to build confidence with your family and confidence in your children. Your children will see your account grow, and they'll want to know about it. You know why your children don't want to know about it? Your grown children? Because everything you told them before that you was going to do, you never finished, right? This is real talk. Like I'm speaking from experience. You know, my son doesn't trade because you know what? I told him I was going to be a chairman. And before that, I told him I was going to be a diamond. And I told him what we were going to be able to do. And I never hit those things. So he believes in me, but he has a lot of unbelief too. Make sense? So his belief in his dad is they're like, Dad, you're going to do this one day. But he got unbelief as well, right? And so in solving these things and actually having realistic expectations and showing them how you can move realistically, all of a sudden your spouse, your loved ones, you are going to believe in you more. You're going to feel worthy more, and you're going to be able to move this thing. And all of a sudden your confidence is going to skyrocket and all the stuff opens up for you. So I hope this was helpful for you guys. If you guys got some value, we'll put it on YouTube. Or it's on there now. You can actually go back and check it off of the live. And I really appreciate it, man. So thank you guys for your time. You guys got any questions or anything that you guys want to share or anything like that? I'll open it up for you guys.
This was awesome. Absolutely awesome training. You hit some really key points that needed to be hit. So I'm grateful. Like I was up and down on that ladder and you were asking for some feed, but I'm jumping down the ladder trying to get there, not put any paint on the laptop. I'm like, I'm here. But I'm definitely looking forward to going back and watching a replay so I can actually sit down and take some notes. But I know everybody got some incredible value from this because you absolutely brought it. You hit the nail on the head. All the stuff that people have had in their ears, their self-talk, all of it. So thank you.
Awesome. Thank you so much. All right. Anybody else had any questions or anything like that? Otherwise, I'm gonna let y'all go. I held you for an hour and a half on a Saturday night, so I appreciate your time. I know this was a weird time, but guess what? Y'all were here, so you guys got y'all got it. Y'all got the information. You're ready for the next lab. We're gonna do boot camps, like I said, with where we're gonna break down piece by piece, and not do a boot camp, but do a section. Like, let me show you a trading plan. Let's actually walk through it, or those different types of things. And so we'll do that. I saw Hope has came up. Hope, you had anything you want to share? Hope, I can't hear you. You got your mic? You gotta turn off your mic or turn on your mic. Usually the bottom left of your screen. Okay. All right. So what we're gonna do is I'm gonna stop this on YouTube also so that people don't share their information for the whole world. So YouTube, thanks. We'll talk to you later. We'll see you soon. A lot of stuff going